So your first trade here, we're talking about Virgin Galactic, and I think it's obviously a hot topic today. Now they're delaying their space flights until 2022. The company's VSS Unity and the VMSE vehicles, they're undergoing some enhancements. What do you think of the stock here? What does this mean?
Well, I don't think a month, and that's what the timeline was, putting that off is really going to change the core business of what they're doing. So if they want to take the stock down 13%, 14% on that type of news, that's one of those ones that you would just want to jump in and scoop that up if you can get it for the right risk to reward.
I understand what you're saying. Ben, your thoughts as you look at the chart.
Well, I'm seeing a gap down, and I think that at this point it's a little bit early maybe to jump in, but you could see the move lower here that we're seeing today, down about 13.75% right now as we speak. SPCE currently trading at that 2075 level. That's the intraday look. Here's the daily time frame that I wanted to bring to everybody's attention, how we're seeing a bit of a double top play out, and the most recent move up into the stratosphere, well, and beyond in many ways kind of failed. You can see how we've been coming off since then. I mentioned the gap lower here. The net change today currently down significantly here, almost 13.5% here now as we speak, and just a move into this selling that we've been seeing. I agree. I think at some point, again, it gets a little bit overdone, and we may have already seen that at this point, down to the spike 1853, but still no rejection of this lower level. I think some dust needs to settle after this one, well, has landed at this $20 level. I just want to point out here, you can see again some of the strength associated with this most recent move off the failed attempt 2650. We saw a bit of a double top on the 30-day over the last couple weeks, and this is where we've really opened up the door to the downside. It wouldn't surprise me to see a little bit of consolidation here. 21 being the upper extreme, this lower extreme, lows from today around 1853. This is going to be a key level to watch this week. We're either going to V-bottom here, Nicole, and work our way back into this range that we just broke out of up around the $25 level, or again, we could hold this lower level for a while and accept this new area around 20. This is going to be key to watch next week, but high conviction to the downside, tough to get in the way of a 13% move lower.
Okay, all right. So opening the door to the downside, I mean, it feels like it had the floor pulled from under it. But Mike, a trader's mind is, you just feel like when something is 13% to the downside and you like the company and you believe in the company, you jump in. What kind of trade would you consider here? You mentioned that you might jump in here. So what would you consider, Mike?
Yeah, so full disclosure, this is actually a signal that I did put out in my trading room. And I agree with Ben that I'm not trying to pick the bottom here. But what I am saying, I'll buy myself some time. And the core business and what they're doing is not going to change. So I do tend to, I'm mostly a technical type of trader, but the technicals kind of go out the door when a fundamental news, like a piece of news like this comes out. So if I can get a nice risk to reward, I'm looking at doing that. So I'm going all the way out to regular node, that's 11.19. I'm looking at the 80-82 call spread for 53 cents. That's trading basically right there, right now. And if we do get that, then that's going to give us about short of 3-to-1, but 2.77 to 1 if we buy it for 53 cents.
What do you think of that, Ben?
Well, I completely agree. I think Mike's right in terms of the fundamental news, not necessarily making up a 14% move to the downside at this point. But again, it's just tough to get in the way of conviction, the energy that we're seeing to the downside. I think right now the bulls want to see this thing hold those lows that we saw back around 15. We're talking about the May lows from earlier this spring, ultimately below that. Again, it's just kind of opening up the door for some further price decay. I think that's the key level should this weakness continue, but still at this point, no indication that the selling that we've seen has been rejected on a bigger picture time frame here. So again, I think you kind of need to be nimble with this one and look for some rejection of these lower levels. Until that happens, again, kind of hands tied and sort of just waiting to see if that lower level, the May lows, holds.
Right, and that right there, folks, is the chart for space, for Virgin Galactic, which is selling off about 13% today. So on their news of a pause, a delay in their space exploration. Okay, let's move on because Snap is also featured here today. Mike, I know you've had this one on your eye. It was near the recent highs. 3 months, it's up 38%. Tell me about Snap, Mike.
So Snap likes to trade up into earnings. And it does have earnings coming out on the 19th. And so what I'm looking for is not necessarily through earnings, but up into earnings. So a cheap call spread there's a ton of support right below us right here. So again, a nice reward to risk type of thing. So looking at the Snap, looking at that 80-82 call spread, buying that for 55 cents. That's going to give us 2.64 to 1 if we get in that one. That one's got to trade back to us a little bit though.
Right. So with that support on the bottom, you're unafraid to be a little bullish there with this call spread that you're showing us. Give people a moment to digest this one.
Yeah.
Ben, your thoughts?
I like this one a lot. This has been on a well-defined trend to the upside, not necessarily at this exact level, right around the 77 handle, Nicole, but here you can see the daily time frame, and you know I look for these areas of consolidation that form. It's an acceptance of price at current levels. Snap recently popped up to 83.34. Since it's been kind of, well, crackling, I guess is the best way of putting it, sideways. You can see that on the hourly time frame. Here's that high conviction move to the upside, and then again, we talk about this all the time, acceptance, sideways consolidation, and basically what the bulls are looking for is resumption of the trend to the upside. I do want to point out, though, right now, it's not really providing that. But keep in mind, Snap is no stranger to these well-defined, long-term kind of consolidation areas that develop, and then you see a gap higher or a high conviction trade to the upside, and then that new area of value forming an upper level. These are kind of, as I like to call them, the footprints that the market leaves us along the way, in this case, up. Here you can see how Snap's been holding right around the 50-day moving average. Also another good example of how investors feel pretty comfortable owning this one at current levels. Me personally, I'd be looking for a breakout to get long up and through this 83.34 level, or if you're looking to participate in this one, maybe a good lower extreme test buy here for the bears if they are thinking that, again, maybe this one's been overdone. I think they want to see a little weakness through the 60 handle before that working assumption that this market's trending higher becomes invalidated. Again, that's the most recent sort of footprint part of the one we're forming right now. Again, the bulls are looking for the high conviction upside to continue. The bears want to see a break of 70.
Yeah, and you make a good point, you guys, how it moves ahead of the earnings, too. So both of you setting us up, getting ready for Snap next week. Mike, what about Boeing? Boeing is a great American company, and we've talked so much about it, particularly with the 737 crash cases, crashes, and the case that now you have the chief technical pilot, an ex-chief technical pilot at Boeing being indicted. Your thoughts on this chart? You're not too hot on this one.
No, and as much as I don't like to bet against Boeing, it's you don't let your feelings get in front of it. You let the data. So we actually a few weeks ago we actually played this off the 200-day moving average. It's now breached the 50. We're looking for a pullback up there. There's just so much bad news coming out of Boeing and quite frankly, it's hard to find strong bullish or bearish plays. Because other than saying, well, this is at its all-time highs, I'm going to say that it's going to retrace. There's not a whole heck of a lot out there that's actually showing the type of technical setup that I like, but Boeing is.
That's interesting, right? So it's hard to find some bears or things that are likely to go lower. Ben, your thoughts, because we've seen Boeing really a volatile stock since all the news has been breaking, and so now you see this downtrend off those highs that were hit back in March, a long time ago. Yeah,
I actually, I think Boeing is still trying to recover at this point. I think the chart shows off the pandemic lows and, well, some of the other woes that have inflicted ticker symbol BA. You can see that they have been and continue to be trying to recover. Now they've lost some of the momentum to the upside as of recent up into this 280 level, but look where they've come from. We're talking about, again, down below the $90 level. We've mentioned, again, how we see this trajectory to the upside, mostly sideways here right now, though. Again, this has been holding right around the 240 level. Not a lot of conviction as of, well, since the beginning of the year for the most part, in a bit of a holding pattern, so to say. Here's a good look at the the daily time frame and just the recent move off of that 89 low, as mentioned, up to 280, but for the most part, it's been kind of sideways since. I did want to take a look at the intraday because this is where I'd have to agree in terms of some of the bearish sentiment on this one. It hasn't really shown that it's been able to get off the ground at this point, continues to just trend lower on the more granular. I think when you're in this kind of like chop type trade that we're seeing here on the daily time frame, I think you have to kind of open yourself up to trading a little bit more of an intraday, a little bit more of a granular time frame. In this case, you can see a pretty well-defined trend lower here on the 5, so something to watch. I think the bears can gain some confidence in the fact that we continue to hold below this 220, 222 area until we break up above that again. On the intraday, it does look like Boeing continues to be under pressure.
Yeah, I mean, this is a shorter term chart. When you look at a longer term chart, you saw it went from 278 in March down to these levels now. Mike, just review your trade one more time. Give us the details on this bearish trade.
Yeah, so we have to trade up a little bit, but I'm looking at the 1029, which is going to actually get us into that earnings, but the 1029, 207.5, 210 for 60 cents. That should, if we want to hold it through, we'll see how it's acting right before earnings. We may hold it through there, but if it can't, I mean, that's a nice one. That's over 3 to 1 if we get that for 60 cents. But we have to trade up a little bit.